First up on the show today, High Street Essentials, which is the parent company of the women's fashion brands India and Fab Ali. They've raised a sum of 50 crore rupees. It's a mix of equity and debt, and this is led by the chairperson of JSW Foundation, Sangeeta Jindal. Let's understand a little bit more about their fundraise plans. And joining in right now on the show, we've got Shivani Poddar, who's the co-founder of HSE. Good to have you on board. Thanks so much. So tell us a little bit more about the fundraise. How much have you raised via equity? How much via debt? And what will it be used for?
So the latest fundraise that we've done is about 50 crores, out of which about 70% is in equity and about 25% is in debt. And the use for the funds right now is to scale the business further. So we are building a large presence in the wedding wear segment in the country, which is about a $15 billion market, about 90% still fragmented. So we want to build a large consolidated brand play there. So the funds are going to be used for both, starting some large wedding stores across the country, building our international business, and new products and new categories in the wedding wear segment. So we'll be using the funds for both capex and working capital needs.
Right. So you cater to India as well as the overseas markets. What about the competitive intensity? What does that look like? Are there well-established players that you have to compete with? And how do you plan to take that on?
For us, the international market is one of the largest segments of the business and also growing very fast. I strongly believe that NRIs across the world today do not have access to good quality, affordable Indian wear, which is where our brand India is coming in and really bringing them, very, very high fashion, good products starting anywhere from about $30 to about $250 to $300. So very, very pocket friendly for them. So from a competition standpoint, we still, this whole segment is still very new. For a lot of NRIs, there are only hardly 2 or 3 online portals that they can buy from, or otherwise, they go to the local stores. So for example, London or Jersey or some of these places are going to have some local Indian boutiques, which are significantly more expensive. So which is why we feel that the competitive intensity is quite low at this point. And it's a huge market today. So we're quite excited about building here.
So you currently have about 12 exclusive brand outlets, I understand, across 8 cities. How many third-party retail outlets do you have? And can you tell us a little bit more about the expansion plan offline?
Yeah, so we currently have 12 own outlets. This is across the country, across 8 cities. We also have about 150 plus points of sale with all the large department stores in the country. So your Lifestyle, Shoppers Stop, Centro, etc. For our own outlets, the intent is to add about 10 to 12 new stores in the current financial year. These are all large wedding stores, so ranging from 3,000 to 5,000 square feet. And we will initially target the metros, so a few more stores in NCR, something in, say, Bangalore, Chennai, Hyderabad, these pockets initially, and then look at a more tier 1, tier 2 kind of expansion. From an own versus franchisee standpoint, currently all the stores that we have are our own stores. We put our own capex and we run the stores ourselves. Another 8-10 stores we will do on our own. And then moving forward, we're going to be looking at a franchisee model as well in the next financial year.
And what about your financials? Have you turned profitable? When's the game plan to do so?
Right. So we've been growing. So we closed financial year 23 at about 250 crores plus on the gross number. 24 is yet to be closed. We are growing our India brand by about 30 to 35% year on year. And for this year, our target is to grow by about 50%. On the profitability side, we are in a bit of positive business now. And absolutely for this financial year, we should be a profitable PAT positive business as well.
The wedding wear market in the country is valued at about $15 billion. But at this point in time, we are seeing a lot of apparel makers actually struggling with the demand slowdown. But you've chosen to go ahead and really raise funds, expand at a time like this. What's making you so confident? How are you looking at the overall landscape?
Absolutely. So on the market itself, like I was saying, just the wedding wear market, excluding some of the other things, which is jewelry and venue and all of that. So just the apparel market today is about $14-15 billion. Now, from that, about 95%, 90% of this business happens in the unorganized sector, which is, if you go to the wedding streets in the country. So if in Delhi, you go to a Chandni Chowk or a Rajouri, or in Bangalore, you go to a commercial street. This is where largely the business is happening today. So what we feel is that today, this entire market, while it's not growing at the pace at which everybody expects it to, it's even now 90% unorganized. And as women are also, more women are working, there is, women don't have so much time where they can keep going back to the same market, spend an entire day, on that street, etc. So women are also looking at branded options, which are good quality, good customization, affordable overall. So from that perspective, we feel that there is going to be a branded presence that's going to get built in this very large unorganized market, which is where India is coming in and building that today. So, while there is a slowdown from the sentiment standpoint, yes, but even then the opportunity is to take share from this unorganized segment and put it in the unorganized market. And that shift you will see is going to happen, has happened in every industry, right? It happened in menswear, it's happened in women's western wear, it's happening in women's day wear from an ethnic perspective. So even in the women's evening wear, which is largely wedding wear, we feel that the shift is going to happen, where more and more people are going to move to an organized branded space, which is where India is building. Hence, the opportunity still lies in building in that 90% market, which is unorganized, and really making it significantly more organized.
Okay, good to have you on board. Thanks so much for joining in. Time for a very short break. We'll be right back.
If you like this video, then like, share and subscribe to ET Now.